This week has one major event that I cannot ignore. FOMC Minutes on Wednesday at 2 p.m. Eastern. With NQ at all-time highs and the dollar now showing bullish momentum, this week demands patience and precision. Let's break it all down. Welcome to the Displacement Diary, documenting my trading journey, one trade at a time. This is the week ahead analysis for May 18 to 22, 2026. Looking at the economic calendar for next week, the story starts building momentum as we go through. Monday and Tuesday both have G7 meetings. Risk sentiment can shift early in the week from the tone of those discussions. The key event is on Wednesday at 2 p.m. Eastern, FOMC Minutes. This is high impact news. The minutes detail what Fed members said behind closed doors about interest rates and the economy. Markets can move sharply either direction. One important thing to consider this week, with NQ sitting at all-time highs, institutions will likely be positioning themselves. If we see long range moves early in the week, that is the positioning. If not, expect those moves later in the week, potentially around FOMC on Wednesday. Now, let's start with the dollar. This week, the dollar is bullish across the board. Looking at the monthly, price respected that volume imbalance and bounced up, and also respected that 50%, which is a bullish structure. And then looking on the right, on the weekly chart, again, that volume imbalance was respected. Price is now above that 50% of this dealing range. And most importantly, price created a market structure shift there and also closed above this CB, which has now become inverted, and therefore I'm looking at price, moving up. On the daily chart, prices closed above the market structure shift W1 level, and that's the first positive confirmation on the daily time frame. But for full confirmation on the bullish run towards the relative equal highs there and buy side liquidity, I need to see a body closing above, zooming past this 25%, closing above this inversion CB W1. Until that happens, we are in a constructive move, but not yet fully confirmed. The inversion CBW1 there and the volume imbalance, they provide the support. That volume imbalance, they provide the support that's needed to push the price up. Price should respect retesting this market structure shift for the discount Judah swing. On the Nasdaq monthly, the structure is still bullish. The bullish order block MN is still forming and remains a major demand flow. However, this week, which is the Premium Wick shadow of the bar at the moment, is showing that price went up, but there was selling pressure which pushed it down, and that is cause for concern for me at the moment. This is particularly considering that the US dollar is strengthening. However, the monthly structure still remains bullish for me, but with a caution. Now moving on to the Nasdaq weekly chart. This is the slide I want you to pay close attention to because the NQ weekly is at a key decision point. Last week's bar showed indecision, no strong directional close. That means the market is weighing up what comes next. The Fib 200%, Fib projection 200% there, which is the full standard deviation, could still be in play. But the US dollar index being bullish is calling for caution on the Nasdaq long side. Let me give you both scenarios. So let's start with the bullish scenario. I want to see a discount wick which comes down and immediately retests this BC high for the weekly chart and reverses sharply. That is, it dips, touches the level, and bounces sharply upwards. That reaction is a signal that the Fib projection 200% is still the target. And then moving on to the bearish scenario, if that doesn't happen, we could see a strong bearish move towards the Fib projection 125%, aggressively targeting and taking out any trailing stop losses that have been building on the way up. This will be the market maker sell model playing out, using Nasdaq at all-time highs to trap longs before reversing. I will be watching for sensitivity of the price at these Fib projection levels and also at these fair value gaps, these bullish fair value gaps as price is going down. And on a weekly basis, I'm neutral and I'm taking caution on the Nasdaq. Now moving on to the Nasdaq daily chart and the 4-hour chart. I'm cautiously bearish here, and this is why. Price has not yet taken out the Fib projection 200. That is, the full standard deviation is still there as an unmitigated target. And when a level isn't taken, the market has two options: come back for it or sharply reverse. What concerns me more on the daily is what's on the right here, which is the 4-hour chart, where a bearish breaker has formed and has been retested. So that's the bearish breaker and has been retested. A bearish breaker is a previous bullish order block that has been taken, broken down on the downside, and then retested from below now, and it's now acting as resistance. The retest has happened, and if price does not come back above it, that is strong bearish, a strong bearish signal. And for me to call the bearish market structure shift on the daily chart there, I need to see price closing below that swing low on the daily chart, which on the 4-hour chart it's that level. That is the line in the sand. Until that happens, the bearish case is cautious but not confirmed. And if the bearish move plays out, the target would be this bullish order block on the daily chart, that bar there. And that order block is where institutions placed their previous buy orders, and it's the natural area for a retracement, which will be on the 4-hour. That's the area to be looking as a natural retracement area. Now a quick look at the correlation. So Nasdaq and SPX made higher highs and Dow failed. So the SMT divergence is still existing and it's worth watching. Then the dollar moved nicely up last week. We now need to see the indices start corresponding with a drop. If, particularly if FOMC on Wednesday signals a hawkish Fed tone, the US dollar index going up means the Nasdaq will be under pressure to go down. So let's watch how they interact this week. Now, let me pull it all together. So the dollar is bullish on the monthly, weekly, and daily. It's all confirmed. The volume imbalance held as support. The bullish market structure shift on the weekly formed. I'm watching for a discount week to respect the level as confirmation of a continued dollar rally. And then in terms of the Nasdaq, it's at a crossroad. Monthly is still bullish, but showing a premium wick from the pressure on the dollar. Weekly, it's neutral for me. There's indecision. And then on the daily, I'm cautiously bearish. The bearish breaker on the 4-hour is the key level. If it's not revisited, the bears are gaining control. And the two scenarios this week, for the bullish scenario, the BC on the weekly high, if that holds, price pushes up to the fib 200%. And then the bearish scenario is if the body closes below the swing low of the daily chart, the order block on the daily chart is the target. And FOMC on Wednesday at 2 p.m. Eastern is the catalyst that could decide which scenario plays out. I'll be patient, wait for the confirmation before committing to a direction. No pressure, no guessing, process over outcome. Please subscribe. The week ahead comes out every Sunday and the weekly review every Saturday. The ICT glossary is in the description. Download it if you want to know the terms that I'm using. Nothing in this video is financial advice. This is my personal trading journal for educational purposes only. Process over outcome. See you in the next video.